Hello, everyone. This will be recorded as well, so we'll share this to our website. But I'm Keith Boswell, and Vice President of Marketing here at ADHD Online. We are doing a webinar today on credit cards, which, in a personal aside, I was sharing with Jim right before this started, having just gone through what feels like one of those perfect storm weekends. So it was first prom and Mother's Day. The credit card certainly was used more than a normal week. And it is a topic that we're always talking about in our family because the credit card is a powerful tool. We have gotten behind as a family with it before. And so the ADHD community in particular, credit card can present kind of an interesting risk, but I think they're also, to Jim's topic, they're also a powerful tool. So Rick, we'll go ahead and get started, and then we'll welcome people to ask questions in the Q&A down below. But we're going to talk today about credit cards and the overall with Rick Webster. He's the CEO of Renify.com, a company that focuses on behavioral engagement with their members and teaching them how to get more out of their money. Mm-hmm. So welcome and thanks for joining us today, Rick.
Yep, I appreciate being here. I really like what you guys do. I think that getting healthcare these days is definitely a problem in this country and in others, and it's really hard for people to work through the medical system at the same time that they're dealing with unresolved ADHD issues. I mean, it's just it's a mess. Another word for it, but it's a mess. So basically, I always like to start off with who I am, so people say, I don't want to spend much time, or like a minute maybe, but otherwise people say, well, why should I listen to this guy? So I've been with CHAD, which is a nonprofit in the ADHD community, for 25 years or so. The entire time I've been diagnosed, basically. I was a member of their national board, and I dropped off of that because I just had way too much to do, but I'm now the chapter coordinator for their largest chapter, San Francisco Bay Area. And I'm on their chapter advisory board. More recently, I've been working with ADA, maybe for the last 4 or 5 years, something like that. I facilitate their Money Matters group. I mentioned those two partly because at this point in my life, I've talked to thousands of people, literally thousands of people with ADHD. So I'm not just speaking from my own anecdotal experience, but from what I've picked up from a lot of people over the course of time. And I, kind of an outgrowth from that, I started a company called Renify, which is a behavioral finance educational platform, specifically at this point for people with ADHD and other neurodiversities. Because managing money is the same for everybody in our society, but with ADHD, sometimes we feel like we're driving with the parking brake on. There's an additional layer of issues going on there. And whether you have ADHD or not, there's this mistaken idea that if you have money problems, it's because you don't know how to budget. And that's really far from the truth. We pretty much all know how to do the 4th grade math of budgeting. We can all add and subtract. We're not stupid. So there's other things going on, and those are more of the emotional drivers for our behavior that lead to impulsivity and such as that. And then, in addition to that, I have a small practice. I coach entrepreneurs with ADHD because I am one, and I understand that area. And frankly, I just do that because I like it. So anyway, that's who I am. But I've spoken to so many people with ADHD at this point. I feel like I live and breathe it these days. I can't hear you. I see you talking. Can't hear you.
Yeah, I did mute myself. Thank you. I know we've talked in the past about, and it's a topic I know you're planning to talk about today. Maybe I can help kick it off. But the ADHD tax is real, right? I mean, and pairing that with a credit card, what are your thoughts?
Well, first I would divorce it from the credit card. The ADHD tax is I mean, it certainly can be related. There's no doubt about that. If you're not using the credit card, if you don't have the right mindset when it comes to that credit card. ADHD tax is largely, first of all, we as ADHD people, we tend to earn roughly 25% less than our similarly talented counterparts do in any given field for any given level of capabilities. We earn less money. There's a bunch of reasons for that. And then after that, we get ourselves in trouble with impulsive shopping and with not paying our taxes on time. So now we have penalties and interest and all those things that happen. We have uninsured car accidents, and just one thing after another. And that's what we typically call the ADHD tax. Again, it's like driving with the parking brake on. Everybody can get a ticket once in a while for driving, for example, but it's the ADHD person who doesn't pay the ticket and then avoids the ticket and then waits for the penalties and interest and, finally for the court summons to come up, and I know that route because I did that myself.
A compounded interest.
It was compounded in the worst way, right?
Yeah.
I mean, it went from 800 to something like over 11,000 by the time I paid it.
Wow.
It was 3 tickets, and I avoided it. And I look back on it. I actually consider the diagnosis of ADHD to kind of be a gift of self-awareness. I won't go so far as to say ADHD is a gift, although it has positive aspects to it, but it certainly is a gift of self-awareness to get a proper diagnosis. And by proper, I mean not just reading a book, right? Some people read a book and with a little checklist in the back, so I must have ADHD. You might be right about that, but maybe there's other comorbid things going along. You may have some anxiety disorders, may have some depressive issues, and a complete, correct diagnosis is really important.
It is, and it's one thing we stand by. I mean, quite frankly, speaking and sharing from personal experience, I have been diagnosed since working here. And it's interesting having come into this job thinking I might have it and then getting on the job and having it confirmed to me. And it really does, it is a real introspective journey suddenly, because there's a lot of rethinking what I knew about what I thought was going on. It's very interesting.
Yeah. Well, we
so
don't know
anyways,
what we don't know.
Yeah, we don't.
And
exactly.
And in fact, the ones of us who know the least are pretty sure we know the most. Dunning-Kruger thing. You can look that one up, but it's really weird. So I wanted to say I divorced it from the credit card for a reason. So I want to kind of start getting into that. There are other financial trainers out there that will advocate that if you're having money problems, especially with ADHD or these issues, that you cut up your credit cards, whatever you do, close those accounts and start using cash. It's about the worst advice somebody could possibly give you. And they cite studies. There's one particular Carnegie Mellon study that they cite over and over again. And I finally said, well, how can that be? I finally looked up the study, and it was a study of 26 people. And it did show that spending cash lights up the pain centers in the brain. It did not show that it translates to behavior. There's a lot of distance between brain cells and behavior. There's a lot of distance.
Right.
Very complex matrix.
Right.
That makes up what we do. It didn't show at all that spending cash is more painful than using a credit card. And I'm going to actually argue the other way around.
Sometimes losing it is, from what I've seen from some of the studies.
Well, yeah, fear of loss is stronger than the desire for gain. That just comes from our evolution, right? I'd rather, miss out on that little lunch than be lunch to something else. So I'm going to be really careful about being the loser here, right? So when we really we prorate loss in our minds much higher, and so to our detriment sometimes. But another topic, the credit card thing. We've all heard that simplistic advice, and it's puzzling to me and interesting to me too. Why these myths? Why do they persist? One of them is, and this is the cynical version, there are financial trainers out there that are making money off the pain and misery of people that have these problems by selling overly simplistic advice, right? So you got all these financial problems, come pay me $800 for my program. And by the way, cut up your credit cards and start using cash because that's the best thing that's going to work. And it makes sense on the very surface. But as you mentioned, Cash can be lost or stolen, right? It can be lost, right? You lose your credit card, you call them up and you get another one, right? So it's a very different thing. So another reason it persists is that people, when you've spent your cash, you might be annoyed by it, but you go earn some more and life goes on. When you get in trouble with a credit card and you have $20,000 worth of credit card debt, it's going to hang around your neck for quite some long time, right? So when we have these problems, we get really sensitized to it. So I don't want to do that again, which is a healthy thing. But then we tend to persist with these myths that, well, if I had only used cash. And so when someone says use cash, it makes sense because we wish that we had done that. Problems with cash is it can be lost or stolen. It's not trackable, which is the biggest thing, actually. It is actually less painful to spend cash if you do it right. I mean, I have to use the caveat there because the credit card can be unbalanced. But if I have $100 bill in my pocket, it's just one little thin piece of paper. I've had it there for weeks maybe, and I use it to buy some shiny penny thing that I really like, and I go home with this coveted $95 item. Well, yeah, I have this thing that I'm excited about, and I don't miss the $100 bill. It's not there. I'm vaguely aware that maybe I should put another one in there sometimes. So if that was my little emergency fund I wanted to keep in my wallet. So I had this fun thing, and I don't even know that I spent the 100. It just goes through your fingers like water, actually. That's what cash does. And the big problem with it is it's not trackable, so that when I'm thinking, well, where did my money go? I want to make a budget. I think I spent 250, or I think I spent $50 at Starbucks last month. If I had been using a card, a debit card or a credit card, I could actually know exactly that I spent $247.18 at Starbucks. I can use that. I can use an objective number. If I used cash, I don't even know where it went. And people say, well, yeah, you just have to save all the receipts and keep track. Well, ADHD people don't do that. Nobody does that. So let the electronic system keep track for you. The reason the equation can get unbalanced, and this is really important, if I have a credit card with a $7,000 limit and I just got it, it's a zero balance, and I go out and buy a kayak for $700, and then I make the minimum $20 payment, well, of course, I have $700 worth of pleasure. I have $20 worth of pain. I'm going to go do that again. That was fun, right? And right up to my credit limit, which is exactly what people do. So now I'm at my credit limit. Now my monthly payment is $350, and I can't borrow anymore. So now I'm actually feeling some pain here because now I got to pay $350, and I'm not getting anything else. As a matter of fact, out of that $350, probably $275 is interest, and I'm not very happy about that situation. So now I'm upset, but that's because I unbalanced the equation. If I bought the kayak on credit, on the credit card, and then I went in shortly thereafter and paid it off, you connect it to your checking account. Now I have a balanced equation. I bought the thing for $700. That was fun and pleasurable. I have $700 worth of pain. I do the mathematical equation in my head. Was it worth it? Maybe it is. Maybe you wanted the thing. Maybe it's not. But when we have a balanced equation where we're buying and paying things off, the credit card is no more painful, or no less painful, I should say, than the cash. In actual fact, the cash is less painful because you don't even know it's gone. Right? It goes through your fingers, it's just gone.
Well, and I think, in some ways too, that, and I completely agree with that principle. Paying it off can open up a world of opportunity too, right? If you're using your credit to your advantage.
Yes. That's the whole thing now. Use it to your advantage. That is my whole premise for giving this talk, actually. And that is, the credit card is a tool, right? Yes, it's risky. I forgot, what's the title? Risky temptation, powerful tool. That was your title. No doubt, it is a temptation. And if we don't use it right, it can be damaging and painful to us, just like your car. You could go out in your car today and get in a big car accident, right? That certainly could happen. That would be a pretty painful experience. If you use your car properly, your odds of getting into an accident are dramatically reduced. In fact, they're incredibly low, right? Most accidents happen because somebody's doing something they shouldn't have been doing. So they're incredibly low. And the car is a useful tool that helps us move forward in our lives, literally. So the credit line that you have is also a useful tool. The place where we get in trouble is when we consider that credit line our money. It's not your money, it's a tool, right? You can put all your bills, your utility bills, all these different things, your car insurance, you can put them automatically to be billed against that credit card. And then you need to go in once a month or once every week in the beginning, if you're really trying to kind of straighten things out. Every week, go in there and say, oh, there's another $500 owed on my card. I'm going to pay that off out of your, I'm going to pay that. I'm going to feel the pain of paying those bills. You're not paying extra bills. You're buying gasoline and paying car insurance and buying groceries. These are things you would have done anyway, but instead of using cash, they're on the card, and then you go in and pay it off. You balance the equation in your mind, pleasure versus pain, and everything starts to function correctly.
Yeah. Marissa in the comments just said, 1 or 2 cards are enough. Most of us learn the hard way after living forever 20s.
Yes, and there's nothing wrong with having multiple cards. What is wrong is mismanaging those cards. I will say, because financial background, if you want to buy a house, you really should have 2 major credit cards, not store cards. I wouldn't even get a store card. It actually doesn't look good on your credit. It doesn't harm you, but it doesn't look good either to an underwriter. But 2 major credit cards, Visa, MasterCard, Discover, something like that, and 1 installment loan. That's part of the minimum qualifications for an FHA loan if you want to buy a house, and with 2-year seasoning. So meaning you've had it for 2 years and kept your nose clean, did everything right. And yeah, I don't want to go too much into the qualifying side of it, but credit utilization is 30 to 35% of your credit score. So if you have a balance on the card, it is dragging down your FICO scores, your credit scores. Yep.
Well, and it's interesting because you think about there's an age where you are, especially in your early 20s, or if you're able to go to college, you end up on a campus somewhere, and it seems like credit card offers are everywhere. And then I've had friends, personally, acquaintances that didn't do those things because they were like, I don't want a credit card. I don't need it. It's just not for me. But then later in life, it was more difficult to build their credit profile because they didn't take that credit.
Yep, that's exactly right. It later in life, you pay that price. And, I also read some things out there that say, who cares? If you're not borrowing money, you don't care what your credit score is, but you do. If you want to buy car insurance, if you want to get a job, there's a lot of reasons. Credit score, and I don't want to trigger anybody, and I don't want to go too far deep into the conversation, but the credit score is actually what lenders consider a measure of character. There's the 4 C's, and it's character, right? It's not capacity. It doesn't say, can you pay your bills? You might be making, $100,000 a month or something. You can pay the bill easily, for whatever house you want to buy. The credit score tells the lender whether you do pay your bills, not whether you can, but whether you do. And so they see that as one of the 4 C's, character, as opposed to capacity, which would be your income. So absolutely.
Good to know. I did not know that.
So, yeah, that's people don't like that. Say, well, they don't like the idea that the lenders see that as a character issue, and I don't see it as a character issue myself. But in terms of from their perspective, if you have the money and you have a poor credit score, what's going on there? You borrowed the money.
Right. Yeah. Why are you avoiding the debt if you took it on? Why didn't you
pay the debt? Right.
So, makes total sense.
Yeah. Sorry, I just lost my Zoom feed. Are you still there?
Yep, I'm here.
There we go. Yeah, click too much on my computer. So I think we're good with that. Credit card debt is almost ubiquitous, right? And it's a huge problem in the community, and it is all because people consider it their money. You mentioned in the, on the college campuses, they've been kind of kicked off the college campuses, but I know when I was there, they lined up, right?
Oh yeah, it was. In the 90s when I was there, it was a line.
Yeah, and so you're just naive, right? You've come out of a household that maybe has never talked about money, because a lot of people don't think you should talk about money. And so, kids get their, young adults, they get their credit cards, and it's a free for all. Of course, they're going to go out to drinking with their friends, whatever they're going to do, and they want to look big, so they put it on their credit card, and next thing you know, they have that problem. Frankly, though, I would start my kids off with credit, and I did just as soon as they're old enough to handle it. And you start off small. It's everything should be small moves. So, our brains go from the general to the specific. Everything should be small moves, so you can get your feet wet and make your mistakes when they're small and not big. So yeah, I would start kids off with, a $200 secured card, maybe something like that, and let them make their mistakes with a $200 card. Better than making a mistake with a $25,000 card a few years later, which they will do. They're going to make mistakes. We all make mistakes in the beginning of anything. It's like riding a bicycle, right? We're going to make mistakes. We want those mistakes to be small and not hugely consequential to our future lives.
So there's a question actually feels kind of related to that, and I wonder. So Ryan asked, what about the studies that say folks spend more with credit?
Untrue. Okay. Now I could argue this either way. Don't get me wrong. I could actually argue what Ryan put there, and be correct. There's an old saying. I have a lending background, but I also have a real estate background, and we did development, joint ventures, things like that. And the old saying is, figures don't lie, but liars figure. And it's so true, right? You can make statistics show whatever you want, right?
Right.
You have to apply a certain rigor to these kind of things. So I don't know if Ryan heard us in the beginning, but it bears repeating. It is not true that spending on a credit card is easier or less painful than spending cash if you're paying that credit card off. Of course, if you don't pay it off, it's, you get all that pleasure for what you bought and none of the pain. Relatively speaking, the pain's going to come later. But actually spending cash is less painful than spending on a credit card if you pay that credit card off all the time. And the reason it's less painful is not because you're spending it, it's because it's the only thing you have gone when you spend it. It's just that, like we said, that $100 bill in your pocket and you hardly even notice it. Money goes through your fingers like water when you use cash. Not to mention the fact that it can be lost or stolen, and you don't have any consumer protections. There are no perks. I mean, there's a whole host of reasons. The whole crux of this, though, is to realize that the credit line is not your money. If you just live with that, it's not your money. It's a convenience for you to use temporarily. And when I say temporarily, I mean in less than one billing cycle. If you buy the $700 kayak, pay it off before the billing cycle is over. You won't pay any interest. If you have a good card, you won't have any service fees whatsoever. It's a convenience.
Yeah. So Erin mentioned in the chat as well. She said, I'm recently diagnosed at 36. We have a lot in credit card debt, and we've tried to pay it off in the past, but end up back in debt. We end up using our cards as backup on months we're short from impulse shopping. Do you have any advice for in the moment when shopping?
Yes, not in my notes, but I absolutely do, because in the ADHD community, including myself, we're all subject to that kind of thing. My first suggestion on something like that, and jot this down because it'll go in one ear and out the other, but I guarantee you, if you think about this, it's workable for impulse shopping. We need to have a predetermined decision matrix, right? When they train firemen how to rescue people from a building, they teach them all the things that are likely to happen in that sequence of events, right? The fireman doesn't get called to the scene and say, oh, got to get up there to the 7th story and save this person. They have a whole predetermined matrix that they're going to run through decisions. And, forks in the road. If it's this, it's that, whatever it happens to be. So very simple one. And these are not my numbers, but you pick your own numbers. If an item is less than $5 and I'm out at the store and I want it, I didn't know I wanted it, but now I see it, I kind of like it. If it's less than $5, say a coffee mug, I don't care, whatever it is, I'm going to buy it, right? Because it's a rounding error in my life. I'm not going to do it 30 times a month. I'm going to do it today because I happen to be there. And if I make a mistake, I beat myself up a tiny little bit, it's $5 and not the end of the world, right? Eventually I sell it for a quarter at a garage sale. So whatever it is. And I don't like garage sales. I think they're a waste of your time, by the way. But so you have this thing for $5, you bought it. You didn't waste your bandwidth trying to figure that out. If it's between 5 and let's say 100, now it's a little more important. So, but it's not huge important. So now I might say, I'm going to take a little time. I'm going to talk to my significant other. If that person is with me, I'm going to maybe ask about the return policy. Maybe I'm going to walk outside and come back, whatever. I'm just going to take a little moment to slow down and let my rational brain catch up to my emotional brain.
Yeah.
Because metaphorically, the emotional brain thinks in pictures, instant, and the rational brain thinks in words. It takes a while. It's like the speed of light versus the speed of sound, right? So
Yeah.
you need to take some time to let the rational brain catch up and say, is this really a good idea? If you've done that, $5 to not to 100, you might say, okay, I'm going to take that chance. I'm going to get it. I don't want to drive all the way back to the store, whatever it happens to be. If it's not the end of the world if I make a mistake. In fact, maybe I'll learn something from it and I'll maybe have to return it. If it's over 100 and you have that as your predetermined decision matrix number, it's over 100. I didn't know I wanted it when I came in here. I really am positive that I want it, but it's over 100. My decision is I'm going home. I will go home. They will have more tomorrow, right? This idea that there's only 3 left is nonsense, right? There's another boat coming from China with 100,000 more of whatever it is that you want to buy. It's not a problem. Most, unless it's a classic car or something. So I'm going to go home. And I'm going to take 24 hours or some reasonable period. I'm definitely going to talk to my significant other. I'm going to decide whether this $700 kayak, for example, that I didn't know I wanted this morning, now I'm in the store and I like it. I'm not buying it. I'm going to go home, even if it means another trip to the store, because I have that predetermined decision matrix that says if it's over 100, no matter what, I'm not buying it because I know all the history of impulsive shopping. I need to put a stop to that. It's tanking my life. It's ramping up my credit cards, making it very difficult. I end up having to pay $3,000 on a credit card instead of, putting money aside for my retirement or my kids' education or any of those kind of things. So just decide ahead of time. Under $5, no worries. 5 to 100, gonna think about it a little bit. Over 100, I'm going home.
Yeah.
Pick your own number.
I think that's great guidance. Just another, you said something and it reminded me of something I've started doing. I'm a longtime collector, as my wife will tell you. And as much as I have out, I have more stuff in bins, right, that I've just bought and collected. And I'm trying to be better of facing that impulse of buying it, which is taking a picture. And then if I really, really want it, then maybe I'll come back to it. But I find that mental trade-off, at least for me, it's working. I'm buying less. Mm-hmm. But the impulse is still there. I mean, that feeding the, whatever it is.
And there's several directions to go with that. When we talk about impulsive shopping, it's not actually impulsive, right? Impulsive would be like a reflex, right? The doctor taps your knee and your leg goes out. Doesn't make it to your brain, right? It bounces right back from your spinal cord. So when we talk about impulsive shopping, it's actually, there are precursors to that shopping. There are precursors to every action that we take, even the ones you think are quick. These things are pre-thought in your head before the action happens, even if you're not conscious of it. So you may want to look back in time and say, you know what? Why do I seem to be subject to impulsive shopping at certain times? Did I get in an argument with my spouse? Did I, am I not liking my work? They call it retail therapy for a reason. I mean, we buy things kind of like a narcotic shot in the arm, thinking it'll make us feel better. And maybe it does temporarily, but it can tank our lives. Which kind of leads me to another thing that you might consider doing, especially for the bigger impulsive items, like a car, for example. You're deciding between, I don't know, $30,000 Toyota and $100,000 Range Rover. I don't even know what they cost, but let's take those two numbers. And the Range Rover is really cool, right? Leather seats, it's a high status symbol car. You think your neighbors will think highly of you. And by the way, that's usually not the case. When you come home with a status symbol car, you think they think highly of you. They're thinking other things. So you could buy that $100,000 Range Rover for $10,000 down, probably pretty easily, right? So you drive out of there with your car, which you owe $90,000 on. If you get in touch, this is the part. If you get in touch with your future self and say, "What's my future self 3 years from now going to think of this decision I'm making today? I've got my car that I bought for 100. It's now worth 70. I had a $90,000 loan, which is now down to 85 or something. Now I've got
Right.
a $70,000 car with $85,000 loan. I'd have to write a check for 15 to even get out of it. I'd really like to qualify for a house, but I can't because I'm paying $1,200 a month. I'm writing a check right now, whatever, to pay it $1,200 on this car, which doesn't even have the Imagine status anymore because it's a 3-year-old car. That's why they plummet.
Right.
So, so if you get in touch with
Like the
your future,
trap.
yeah, if you get in touch with your future self and say, well, that's going to look pretty stupid 3 years from now. I don't want to do that. That might help you, might inoculate you against buying that car in the moment. And, again, I'm not saying what you should or shouldn't do. You may decide that car fits easily within your budget and there's no problem and you want it and you're given it some good rational thought. But for a lot of people, they're going to say, well, no, I think I'll buy the $35,000 car. In fact, I think I'd like a hybrid because this other thing only gets 12 miles a gallon and gas is $6 a gallon these days, at least for me out here, California. So you may make an entirely different decision if you think about your future self and say, my kid's almost college age. Do I really want to be paying $1,200 a month for a car and trying to figure out how to pay tuition at the same time?
Right.
Maybe I would prefer to lessen the load for my kids so he or she doesn't have to take out all these student loans, which is a huge problem for an entire generation.
Right. Just to echo that Stephanie said in the chat, she sets
Yeah.
a limit by month for what she can spend on impulsive purchases, which I think goes right along with what you were saying.
Perfect segue. So I believe budgeting is like 10 or 15% of what it takes to run your life well. Most of it's emotional drivers of our behavior, as I said, but budgeting is important. And when we budget, it can't be an overly restrictive budget. Just like a diet can't be overly restrictive, it will fail. So when we budget, there should be line items on there for the things that we like to do, right? If we like to go out to lunch with our friends, we can't just leave that out because we're going to do it and we'll be violating our budget. But we can, as Stephanie said, put a line item in there and say, what, $150 a month, lunch with my friends. That's what it's going to be. And we don't need to be incredibly strict with ourselves unless we seriously have a problem, then we would. But we just need to say, it's in the range. It was 120 last month, 160 this month. It seems like it's running along okay. That's okay. But if you have that line items that say $150 and then you find yourself spending $600, you say, hey, something's out of line. Either I need to increase the number because it fits within my budget, or I need to be a little bit more disciplined about, doing that. And I'll tell a story. I've got, do some coaching and stuff. And I guess this was a Renify person, one of our members. She was really struggling because her friends went out to lunch every week and they went to these nice places and they spent a lot of money on lunch and she just couldn't afford it. And she was really lamenting the idea that she was going to have to tell her friends she had to drop out and this and that. And I don't know if I suggested, as a suggestion came up, why don't you tell your friends, just be open and say, hey, I'm struggling with this. Can we do something else? Maybe otherwise I'm going to have to quit doing this. Well, it turned out all of her friends felt the exact same way. They were all trying to keep up an image. They were all spending more than they thought they should be spending. Some of them were getting in trouble with their spouses, whatever it was, they were all having trouble. Now they still meet once a week. They just go somewhere cheaper, right? Which is what's the old story? It's not about what's on the table. It's about who's around the table. So
Right.
we need to identify these things. What are we really getting for the money that we're spending? She's getting just as much now. In fact, probably less. She's probably getting more because she has less stress around it.
Well, and they're probably all bringing something more to it, right? Because there's a bit, when you break that wall, that facade, and express that little bit of vulnerability, we all are surprised how much we're all trying to keep up, and social media certainly hasn't helped set the bar any lower, right? It's only pushed it up.
Yeah.
As I like to remind people around me, the curated life, right? It's a highly curated view of a person's life.
And I know you deal with people who are recently diagnosed a lot. It's one of the big issues because unfortunately we tend to judge ourselves, our internal experience, by what we see other people's external facade, right?
Right.
So we see people going on vacations, doing this and that. We don't actually see what's going on internally to their life, right?
Right. Right.
Internally, we know, when we took a vacation, we're still paying for the last one that we had, right? So we know what's going on there, even if they don't. So
Right.
we have to be careful with that. Um, and another thing about being recently diagnosed, I think it's really important. It's a chance to become real and authentic. And as a matter of fact, if you don't, things don't work out very well. But as ADHD people, an awful lot of us created this facade, which started way back in grammar school, because you need to fit in, right? If you get marginalized, you go extinct, right? That's nature.
Yeah.
So you want to fit in. And since we want to fit in, we create this idea of what we think people want to see, what will make us popular, et cetera, et cetera. Well, we're still doing it as adults, and it's killing us in a lot, literally in some ways. So when we have it, we don't want to wear everything on our sleeve and that sort of thing. We don't want to be the victim, but we definitely want to become much more authentic in our interactions with people. And that's what this woman did. She became authentic. She's, instead of feeling shame, for whatever she felt, she said, I'm just going to be honest. I can't afford to keep doing this.
Yeah. Well, we got a question that came in from Autumn. And this again kind of goes into the psychology around this. So the question, why is it so easy for me to drop $5 to $10, but not to spend 100? Or I can put $100 in savings in one day, but can't put $10 in savings for 10 days. Everyone says that saving money is about the little savings, but why is it so hard to value those tiny amounts?
Well, interesting. I'm not sure if I totally get the gist of that question.
Well, I think there's been a movement of like these micro savings. There's this,
Oh, yeah.
oh, are you going to take a cup of coffee? You could put that right into savings, right? And so there's like this value equation almost. At least that's what I'm reading into it. Autumn, if you have any other thoughts, please share in the chat. But there's this, you know what I mean? Like this, oh, well, you could, if you just did the little things, all that money would add up.
Yeah. So I think I disagree.
That's why you're here.
I mean, there's this idea, and this is probably a total tangent, but this idea that wealthy people got that way because they watched their pennies, that's a myth. It's not how it worked,
Right.
for 90% of them. But let's go back to the idea of savings in the first place. If savings is made easy and it's almost made invisible and not in your face every day, it will just happen. So there's a concept called pay yourself first, and I totally believe in it. You're getting a paycheck for whatever, say $1,000 paycheck. If you tell your employer, I want you to put $100 every month into my retirement account, whatever you call it, just send me the 900. That's all I need. And you learn to live on the 900, which you will. And there's ways to do this if you're already spending every dime you have. And I don't think we should live a life of deprivation, so be careful. But if you automate and you have that money taken right off the top of your check or whatever your income is and save it, then that's great. What I do agree with in that, I don't know that small things add up. Obviously they do, but I don't think they really are as significant as people would like them to be. What really works though is consistency. If you start when you're 18, I don't care if it's $5 a week or whatever, or a month. If you start then, and then as your income goes up, you increase those amounts, you've got the habit of savings. The problem for people to start saving is because they've got a lifetime of not saving, right? And so it feels like deprivation. I got $100. Oh, I have to put it in my savings account. I'll never see it again. Well, that's not a good feeling, right? But if you just save, and that's where we get our money story from, like our parents, for example. Maybe our parents were really frugal, and so we can end up being that way. We are a series of habits. We are the habits that we have. Habits are really important, and those habits need to be embedded into routines, otherwise they don't stick. So my suggestion would be, small is good. If you need to start small, just start small, anything. But my idea is to get a habit going to where you are setting something aside on a periodic basis.
Yeah, and I think the other thing that I would just reflect back and what I heard Autumn saying I think you have to kind of do what works for you. I mean, if you realize kind of in yourself, like, I'm not going to put $10 away for 10 days. And it actually, to me, might feel better to put $100 into savings. I think you kind of have to trust your own gut. I mean, that's part of, I think, the other learning around ADHD is like, the more you resist your own instincts and try to maybe follow something. I mean, I think principles are great, but like, it can really scramble people, I think, sometimes. They
That's
try
what
to
I,
overfit someone else's solution.
yeah, I tell all my coaching clients that almost the very first session, there is no off-the-shelf day timer that's going to work for you. There isn't one. You can find
Right.
one that'll do some of what you need, but then you need to layer everything else around it based on your own life. You need to design your own life based on who
Right.
you are as a person. And obviously there are tried and true principles, such as setting money aside every month on a consistent basis, but you need to find out what works for you. I saw someone, I think, put in there that they budget for their iced coffees, but it's the unrelated expenses that kind of shoot them down. And that's very common, because those unrelated ones, we don't expect them. And maybe we're not feeling very good, maybe a little bit depressed or a little anxious about some upcoming job interview or something. That's when we're susceptible to going out and buying something like that. And in that it wasn't planned, it's not the iced coffee that she gets every couple of days at work or whatever. It's unplanned, which means your emotional brain is in charge unless you can slow down enough to let the rational mind catch up. The
Right.
emotional mind, not brain, but and it's metaphorical, of course, but the emotional aspects of what we are far, far more powerful than our rational mind. As a matter of fact, Jonathan Haidt's a great author, social psychologist out of some Eastern university. He has a metaphor, and you can just Google this and get an image. It's the elephant and the rider metaphor. And in his metaphor, the elephant, this 10,000-pound elephant, is the emotional mind. And it came along very early in our evolution, and it does a lot of things. I think it moves very, very quickly, which keeps us from being lunch for something, right? And then the rational mind came along later. That's the higher executive functions that we have, which are a little weak in the ADHD mind. That's the 140-pound rider who is trying to help the elephant get what it wants in a socially acceptable way. If the rider tries to make the elephant do something it doesn't want to do, it isn't going to work, right? It just won't work. If we work at cross purposes with what we feel, it's a recipe for, I don't know, it's a recipe for being in a psychiatrist's office. It's a tough situation. We really need to align the different aspects of our mind and our desires and what we want.
Yeah. Well, I think you kind of mentioned Rocio's comment. She talked about she budgets her iced coffee so that she can enjoy life. It's the unplanned expenses or the random urges to buy something nice that get me, right? That's the trap we hear. Aaron had a question. So if you aren't a routine saver, is there a way to just bite the bullet and save it despite the pain of it? That's so tough for me. I know this kind of goes to building credit card or savings versus
Yeah.
spending a little bit.
And that was if you're not a routine saver?
If you're not a routine saver.
Yeah, I would. And I'm going to qualify this based on the person's life situation. But at first I would say, yes, kind of bite the bullet, just say, and maybe talk to your employer or whatever, if you have that option available to you. But just basically every time you start getting it, just make a decision, a preloaded decision matrix. Every time I get a check, a certain amount of it is going to go into savings.
Yeah.
And I want to qualify the word savings also too, because that doesn't mean putting it into a bank account. That means setting it aside though. And I already lost the other train of thought I was having. When you start saving money, your first $1,000 or so can go into your checking account, right? Because it's an emergency fund. Literally, if your car breaks down, you're out of state, you want to be able to hand your debit card to some guy and have him fix your car, right? If you've got,
right,
another dig against cash, but if you got cash in an envelope at home, it's your emergency fund, that isn't going to help, right? That guy is not going to wait for you to mail the cash to him, which you can't even do. Even then, you have to convert it to a check. So the first 1,000, that goes in a checking account. But after that, you're saving reserves for lost income, for example. That might be 3 to 6 months of your paycheck, and you're saving for retirement. It's bigger money. That needs to start going into a securities account, because you can earn safely, relatively safely, 4 to 6% on that money. The bank account's going to give you nothing.
Right.
Yeah. So the bigger money goes into that, and that's the money you won't need instantly. And in a securities account, you can have your money in 2 days. There's a settlement period, but you can have your money. So, matter of fact, if it's a margin account, you can have it instantly. So, a little bit off track there, but yeah, I would start off with just saying a certain percentage of every check I get is I'm going to set it aside. And at first it's going to feel like self-discipline, which it kind of is, but that's what gets us started.
Well, so
Now,
Autumn answered back in the chat. I just want to go back to this real quick. She mentioned she recently started moving $10 a day to a separate account for impulse purchases, and she's been trying to use only that $10 and then let it roll over each day, and extra at the end of the week. It goes to savings as a bonus. And then she said, she was just telling us, she mentioned that to Rocio. She said, yes, my 100%, my biggest issue is not ever having a savings background. My parents both have ADHD, never learned to save. So now I'm trying to figure out a savings plan that works for me.
yes, and that is a huge thing. We get our money story from our parents, from our siblings, and as we grow up, we get it from classmates, sometimes from teachers, although not very often, but we get our money story from that. And unfortunately, if we didn't get a good money story like from our parents fairly early on, we're learning our money story off of social media and off of TV and advertisements and stuff. And the money story we're getting is, hey, you don't need $40,000 to buy our car. Come on down here with your $10,000 and you'll drive out with $40,000 car. That's the money story we're learning. And if we don't have something else that we learned earlier, then that becomes our money story. Hey, I have credit, I'm going to go buy. I've got more credit, I'm going to go buy some more stuff. So we have to be conscious and mindful, and we have to seek out, teachers, so to speak, who can show us different lessons. That idea of when the student's ready, a teacher appears. It's an interesting one, because the fact is the lessons are always out there, but when the student's not ready, the student doesn't see those lessons.
Right.
When you feel the pain of having financial issues, you probably start looking around and say, I need a better money story. I need a better identity around money, and where am I going to find that?
Well, so this is interesting, because you mentioned, the studies around and disagreeing with this idea that you're going to spend more with credit. Nicole in the chat brings up a really interesting point, which is, she said, I stopped shopping at Target in person as the little impulse buys added up. Now I spend half as much with same day delivery, even with tip, and support someone who does the shopping for me. No impulse buys online. I recently had to pick up one quick thing at Target and ended up walking out with 7 items that caught me. Their store is designed so well for people like me.
And
I actually worked in retail, mass retail, and I know that to be true. I mean, the store is very much intended. They actually call the main lane the racetrack, and then the throat, so that they know where you are.
Absolutely. They have studied this inside out and backwards. They know exactly what you're going to do, right? I mean, they know what populations are going to do. I mean, you've been in that business. They put some low traction items right near the front door, because people blast in the front door. They're walking at full speed, and they put all their low priced impulsive items right at the cash register, because you're slowed down, you're waiting, et cetera, and you buy that package of gum or whatever it is, or a magazine. There's definitely a science between the way these stores are laid out. And they are designed, I actually have a talk maybe I'll do it here sometime, but the world is designed to separate you from your money. It literally is designed.
It is.
Right? You walk down a city street, you see 100 signs, every one of them in one way or another says, come on in here, spend some money with us, for things that you may or may not have been planning to do that day. So the idea of showing up to a Target with a goal of getting one, they are plotting against you in a sense. I mean, I'm not being cynical, but their whole goal
is their job. I mean, that's literally their job. I mean, so
you go out.
I mean, you can malign it or whatever, but they're paid to go there and sell you stuff. And getting one more item in the basket is a lot of people's job.
Yes, that's so true. And getting the right items in the basket.
Yeah, exactly.
So
Well, I want to make sure this is a really important question that came up in the Q&A. And this feels highly relevant because I think this is where credit and credit cards start to feel dangerous. So Taya asked, I've already created a credit problem. I don't know what to do. Is there an org that's legitimate that can help me consolidate the bills? What is your advice for someone that's in
yeah, yeah,
a pinch like this?
definitely. There are nonprofit organizations out there and that you can go to that can really help you to really teach you how to budget, get a handle, and understand the impulsive nature of some of these things, and that and they can definitely help. There are also far more organizations out there that are very scamish, and they will say they're taking care of your credit cards, and they'll say they're making deals with, and they don't necessarily do what they say. And if you read the fine print, you know, there's stuff that gets them off the hook legally. They basically will take your money and not, your problem will get worse as time goes by. So I'd be very careful about that kind of seeking that kind of advice. When it comes to consolidation loans, I'm all for them with a huge caveat. Most people who take out a consolidation loan, and that means you have $20,000 in credit card debt, it's costing you 18%. You say, well, I'm going to get a $20,000 personal loan and it'll only be at 7%. So it's a great deal. Mathematically, that's absolutely true. And you turn it from revolving debt into installment debt, which is really good for your credit report as well. By the way, people don't realize that, but back in the old days, that's what we did. We said, okay, let's get all this credit card debt paid off, and now we can qualify you for a house and get you a better loan than you would have gotten otherwise. Whole nother subject. But the problem with consolidation loans is mathematically they're correct, but most people who take out a consolidation loan, within 12 months, they owe more money than they started. Yes, they got rid of all that high interest rate debt, but now they've got free and clear credit cards. They haven't changed their lifestyle. They haven't changed their financial identity. And so next thing you know, those credit cards are right back up where they were, and they still have the installment loan for the old debt. So what I suggest to people do, you know, unless you're deep in the fire, that's another issue. But if you're just struggling, I would say make the credit card payments, make a little bit more, make sure you're paying the interest and the new charges and a little bit more every month for at least 4 months, and maybe longer, depending on your own personality. But do that for at least 4 months. If you can do that for 4 months, if you can pay these cards down and you truly want to get them to zero, then go get your consolidation loan, end up paying 7% instead of 18%. That's a good thing. And continue paying it down and realize, you know, kind of celebrate, hey, my cards are at zero, I'm keeping them there. You just say, wow, I'm out from under that. I'm never doing that again. If you can do that, the consolidation loan is good. But most people don't do that. Most people take out the consolidation loan before they've changed their habits. Now they're free and clear. Next thing you know, they don't feel good about certain things. They go out and do a whole lot more impulsive shopping, retail therapy. You know, it's a thing. So we have to be very careful about that. I would, if I was going to put a plug in for an organization that you could trust, it would be us, actually. If you Renify, that's what we do. We don't do credit counseling at all, but we try to give people advice that is actionable and useful to them, and that sort of thing. Credit counseling is a whole field in itself. And yes, you can Google them. Just make sure that you check them out thoroughly, look at the reviews, look at Better Business Bureau, find out if they're scamish, because an awful lot of them, in fact, the majority, are scamish.
Yeah.
And you don't need to have a big problem and then someone come along and take advantage of that problem by making your problem worse.
Right. Well, Jim, I know we've got about 5 minutes left today. What would you close with? What tips and advice would you share?
Yeah, I'm itching to tell you about something that we're doing this because of you, actually.
Oh, we can't wait to hear that.
But you guys help people get diagnosed, and I think that's a fantastic thing, because I know an awful lot of people who feel like they have ADHD. They read a book and now they're pursuing all those things, but never actually got diagnosed. And it's kind of a little known fact that 30% of the people who think they have ADHD but were never diagnosed actually have sleep apnea. And if they're self-medicating with a strong stimulant, it isn't going to help their sleep apnea, right? It's just not going to help. Sleep deprivation does not help with stimulants, generally speaking. So I really think people should pursue a diagnosis, and I understand how expensive and how hard it is to get through the system these days. But what we're producing, and I tried really hard to have it done before today, but I couldn't, because we want to deliver a quality product. But it's basically, at this page, this stage is 10 or 15 pages. It'll be about 30 pages by the time we're done, and it'll come with 4 little 10-minute videos. Just an idea of what do you do when you're first diagnosed, and there'll be a little bit about what do you do if you haven't been diagnosed yet, but most of it will be what do you do, because I know myself, I got diagnosed and I was bewildered. Okay, I got my medication, now what? Guy says, well, come back in 3 weeks, tell me what's working. Well, I don't know. I didn't know about CAD back then. I didn't know about ADA. I hadn't read hardly any of the books. I didn't know all those different things. I didn't know about coaching, and I didn't know what kind of therapy I should pursue or any of that kind of stuff. So we're producing basically a document with some attached videos that will help people kind of get their feet wet, so to speak, and say, okay, here's some things that I can look at. None of it's going to be definitive, right? You have to figure all that out on your own, but at least there'll be whatever 30 pages of stuff that says maybe you should check these things out. And I had no idea about that when I was diagnosed. Luckily, I fell into CHAD fairly early, and made a thing of it and learned a lot about it. And we're all different, but I almost went back to graduate school when I was diagnosed, but then I said, I can't afford that. It's going to take 10 years and all that. So I renewed my university library card, and I just, like a grad student, I just researched the heck out of the things I wanted to know about, which for me was ADHD and the trauma connection, which was fascinating to me. So anyway,
and it's interesting because, Aaron in the chat is saying it's overwhelming when you're first diagnosed. There's so much info out there. Determining what's good info and bad info is hard. She was diagnosed last year. I feel the same way. I mean, it's part of what we're committing to as an organization. I mean, it's a great, we know there's so many things to learn about this condition and this, and neurodiversity in general and all the things that are related to it. And so, yeah, that sounds like a fantastic resource.
It can seem like a catch-22 a lot of times, because ADHD, it comes with executive function issues. And if you've got a medical system that's really hard to navigate, and now they've got all these roadblocks, and you are already weak in that area, that's an interesting thing. I'm going to put we just put a link at the bottom of our website. There's lots of stuff on there, but and the website's really just a conversion page. So ignore all that if you want. We'd love to have you join us, but just go straight to the bottom. And the bottom of our website, and I'll just type it in here, is just an invitation to join our email list. And if you get on that, we won't spam you. You'll get a newsletter from us once in a while, but we won't spam you. And when that thing is done, we'll just send it out to everybody who's on that list. So
that'd be great. And I was going to say, we'll be posting the webinar on our website, and then once you send that, we can post that on the follow-up page as well, make that available to everybody. Yeah,
I just, it was an idea that occurred to me quite some long time ago, but when we kind of, met you guys, and I just said, it's time has come, right? You're dealing with people who are struggling to get diagnosed fairly early in the journey. And it is a long journey. I was diagnosed probably, I don't know, I was 46, so whatever that is, 44 years ago, no, 24 years ago. It was a long time ago. And, I would, in fact, that's partly why Renify exists. I would like to shorten that process for people. It took me a long time to learn, and I was really proactive about it. A lot of people, they get diagnosed, and then, it's the ADHD time warp. Nothing happens for 2 or 3 years.
Right.
We want to shorten that.
It's true. All right. Well,
that is the address there. Yeah.
I'm going to make sure it goes out to everyone. Yep. So that's it, renify.com. Rick, thank you so much. This, as always, I really appreciate that you share so much, and you make these interactive and really responsive to the audience. It's really valuable. And so thank you. We look forward to the next one. And yes, Natasha's asking, we will have a recording posted. It usually takes us 3 or 4 days, just because we like to make sure they're edited and sound is all good. So we'll send out a link as soon as that is done. So thanks again, everybody, for joining us today.
Thanks, guys.
We'll see you all again soon.
Thank you, guys.
Upcoming webinars, just be sure to check our website. Thanks so much.